I'm awaiting the squeeze. I think the squeeze could be quite dramatic at the Chinese end. Anyway, so we'll see what happens there. But the other point I'd like to make is that on this dip, I'm hearing from everywhere around the world that buyers for gold and silver were just queuing up to pick it up deep levels. Now, that's interesting because it tells us that the psychology behind the market now is immensely positive. People are beginning to understand why you should have gold and silver.
And so essentially what they created is this very, very stable, as you say, the price really didn't come down a lot based on this huge drawdown. And if one looked at that and then you see, my understanding is, and I won't use the words that they told me, but they were very unhappy with what happened. And so what this 450 tons, and there was only 300 tons of supply.
As of early 2026, China is creating a major, intentional squeeze on the global physical silver market, treating it as a strategic rather than industrial material. Extreme movements, like a global supply squeeze in the fall, are nothing new to the relatively illiquid silver market. Chinese inventories were already exhausted when demand for investment surged. The silver bull run is poised to continue, driven by an intense physical supply squeeze, record investment inflows, and massive industrial demand that is creating structural market shortages. Veteran economist and longtime precious metals advocate Alasdair Macleod and AndrewMaguire provide insights into COMEX activity and global bullion market structure. In this video, Alasdair Macleod reveals that while the West is distracted by paper price swings, a massive short position was trapped on the Shanghai Futures Exchange. This isn't just a technical squeeze, it's a strategic drain of Western vaults. Macleod argues that what looks like a bull market in gold is actually a terminal bear market in fiat. We're watching the dollar collapse in real time, and Shanghai is the place where the final price will be set. Regarding geopolitical tensions, Macleod argues that China has long allowed U.S. policy mistakes to weaken the dollar on its own, but has recently taken a more assertive stance. Meanwhile, the liquidity stress in London, sharply rising lease rates, and consistently higher silver premiums in Shanghai signal that the price discovery is increasingly shifting from the West to China. Seasoned expert AndrewMaguire underscores that the Shanghai Gold Exchange operates on a physically backed system. Both analysts note that the growing shift from paper to physical metal, combined with financial tensions between the US and China, signals the early stages of a broader financial conflict favoring gold and silver. If you're ready for unfiltered truth and sharp market analysis, hit that subscribe button. Let's explore the latest insights from Alasdair Macleod and AndrewMaguire's recent interview.
One point is that there was no speculative interest in COMEX or indeed in London ahead of this. What subsequently transpired was there was speculative interest on the Shanghai Futures Exchange, and quite a lot of that on the short tack. Not long. I mean, this guy was Bain something or other, Xiling or something, short of over 30,000 contracts. And what's interesting is that next week is Chinese New Year, Year of the Horse. Markets are shut. Mr. Bain has been told you cannot sell anymore. So the only thing you can do is buy to close. Or deliver. I'm awaiting the squeeze. I think the squeeze could be quite dramatic at the Chinese end. Anyway, so we'll see what happens there. But the other point I'd like to make is that on this dip, I'm hearing from everywhere around the world that buyers for gold and silver were just queuing up to pick it up deep levels. Now, that's interesting because it tells us that the psychology behind the market now is immensely positive. People are beginning to understand why you should have gold and silver. And the people who are understanding are central banks, governments, let's say some of the super rich, wealthy Asian families. They're not all. The people who may be people with huge, great funds who are close to government and know what central bankers are thinking. And perhaps some old money, which understands the difference between money and credit, not that many people do, but understand that it's credit going down in value rather than money going up. Because, that's the point. It's not a bull market for gold. It's a bear market for fiat currencies. So there's that. the other point I'd like to make is that the geopolitics are evolving really very rapidly. I mean, interestingly, China has always taken the view, why interfere with the dollar's demise when the Americans are basically making all the mistakes? So really, for the last, 3-4 decades, they've just sat back and let America make all the mistakes. Every time America comes out with something against China, whatever, it ends up, China doesn't get hurt, really, and the dollar gets undermined. People start losing confidence in the dollar. I mean, a good example was cutting Russia out of SWIFT and stealing Russia's central bank reserves. So, literally everything they have done has just backfired on them. And so the Chinese have done nothing until last September. Last September, they finally decided that it was time for them to act. You have a capricious president in President Trump. You can't trust a word he deals with. He changes his mind every minute. He's, 1 minute he's peacemonger wanting the Nobel Prize, another he's all for bombing the hell out of someone or other. I mean, this is unstable, if you like. And it really started with the Chinese saying, okay, rare earths, you're not having them. And literally just stopping the export of rare earths without an import, an exporter and a foreign country having a very, very good reason to do so, and being relatively friendly to the Chinese. I think what's really, if you join the dots though, it was about the same time that things changed for silver, because until then, China had been happily supplying silver into the market, basically to suppress the price. But then they turned around and, America suddenly decided, this is a critical mineral. So China's attitude towards silver changed at that moment quite sharply, and I think various other things too. So what we saw was suddenly there was a liquidity squeeze in London, where I think it was October the 9th. You'll correct me if I'm wrong. Lease rates shot up to nearly 40%.
Yeah.
Backwardations between London and COMEX appeared for a while. We've had consistently, you would think that this is just a problem confined to us in the West, but no. I mean, actually, the price of silver on the Shanghai Gold Exchange and also the Shanghai Futures Exchange has been higher by significant premiums over ours. So, I think this sort of tells us two things. First of all, the price is actually made in China, not here, which is very, very important. I think the second thing about it is that the supply situation in the West is still dire. And actually, what's happening, if you get to the bottom of it, what's happening is that people are getting out of paper into physical. And I mean, when you've got, say, 100 times paper, you have physical or no physical, I mean, where do you go? And this is why you've got problems in the market. And they've only just begun, in my view. I think it's going to continue, because unless the Chinese relent, and I don't think they are, bear in mind that they're now on the warpath. They turned around and told their own institutions yesterday, the day before, don't buy US treasuries. Reduce your position. Get out of crypto. We're banning it completely. Anyone who deals in crypto is going to jail. Sort of thing, So they're clearing text, in my view. This is classic, absolute classic. So we're into a financial war, and the beneficiaries of this are going to be commodities as a whole, led by gold and silver.
Oh, that's really well put, and I think very succinct. And I think the PBOC. My understanding is the PBOC was very, very, very unhappy with this trader that we talked about a little while ago. Really unhappy, because what China's been doing is creating the SGE is physically backed. So if I want to trade, buy or sell a bar on the SGE, I have to own that bar. And so essentially what they created is this very, very stable, as you say, the price really didn't come down a lot based on this huge drawdown. And if one looked at that, and then you see, my understanding is, and I won't use the words that they told me, but they were very unhappy with what happened. And so what this 450 tons, and what there was only 300 tons of supply. So obviously that created a problem, and it sort of pushed back against.
Alasdair Macleod notes that the modern economist's toolkit is broken. by treating gold and silver like tech stocks or mere industrial commodities, Keynesian models miss the fundamental shift occurring right now. Macleod argues that technical indicators and moving averages are useless when the underlying currency itself is in a terminal bear market. Gold and silver have historically served as final settlement currencies with no counterparty risk, while fiat currencies are promises backed by expanding government debt. As debt continues to grow and political systems depend on constant credit expansion, Macleod predicts continued currency debasement. Drawing parallels to past currency collapses, AndrewMaguire warns that the long-term trajectory points toward weakening fiat currencies and substantially higher gold and silver prices. The US dollar has hit its lowest level in 4 years, continuing a significant decline from 2025 due to trade uncertainty, tariff threats, and geopolitical tensions. This slow burn decline reflects shifting global power dynamics and investor concern over US fiscal policy. Let's jump into the interview.
So the idea that actually it's the currency going down rather than, let us say, a basket of commodities rising is alien to traders anyway. And of course, because it's alien to traders, it's also alien to most investment managers, and it's alien to their clients. And bear in mind that, for the last 54 years, 55 years now, people have bought the Kool-Aid from the US Treasury that gold is no longer part of the monetary system. The dollar is the monetary system, and everything is tied to that. I've even had Austrian economists who should know better saying the dollar is money. No, it is not. It is credit. In other words, so there is disinformation. And indeed, going back to Keynes's general theory, he invented macroeconomics in that book, literally on, I think, page 16, page 20, something like that. He said basically about Say's law that, if it is wrong, then there's a whole new, I think his words were something like, there's a whole new chapter of economics to be written. That was the basis of macroeconomics. It was all based on a lie. And the idea that statistics can actually tell you anything about the future completely ignores the human element. These guys just don't understand economics. They're not economists. They're mathematicians. And if they're anything, they're mathematicians. So it's hardly surprising that when the system starts falling apart, they're bereft of ideas and they don't understand what the hell's going on. And I think that's basically what you've been describing.
Yeah, and I think again it leads into what they do is they take gold and silver and say, well, let's look at the moving averages, shall we? So if it's above the 200, it must come back there. And what they're forgetting is that from as we've been saying, that when these long-term moving averages they've been populated, they're anchored in a history where the markets were determined in the West, and they're no longer anchored in the West. So therefore, when you just mindlessly say, well, we've got to pull back because it's above a moving average, they're just not getting the fact that it doesn't. You're dealing with apples and oranges.
No, that's absolutely right. The idea that you can treat commodities, particularly as a group, in the same way as you treat, let's say, investment in tech stocks, is completely fallacious. And the number of, as you rightly point out, the number of mechanical technical analysts, who said that silver is overbought or something. Overbought, basically, if they go back and read the books, basically what they're talking about is a situation where there is undue speculation. But where are the speculators? In silver, we've got open interest on COMEX about as low as it gets. As you rightly point out, $5 spreads basically means we're not dealing. We don't want to know. There is no market. The speculators are not there. There may be some in China, and we sort of think, okay, this has been rising and rising and rising, and so the Chinese love a punt, so they will have gone in there and they've bought it. So okay, we could shake out a few guys over there, but it turns out they've gone and shorted it. It's absolutely unreal. These are not markets that you can analyze, if you like, in the way in which you would analyze, if you like, an investment, because gold and silver are not investments. They're money. They're real money, or commodities. But it's not an investment. And this is where the big mistake is being made. And to try and turn them into investments by coming up with sort of handy things from ETFs to derivatives and all the rest of it is actually getting the whole thing arse about face.
And people forget, and it's in your face every day. Gold and silver traded as foreign exchange cross against the dollar, against other fiat currencies. So it's not just a commodity, it's money. And it's money being weighed up against those crosses. And I think people forget that. And it's none of the analysts seem to focus on, it is actually money. And it's right in your face that it's money.
I think the other thing, Andy, is that nobody actually understands the legal position. The legal position is that gold and silver, or a similar metal, throughout history has always been final settlement. Where you don't have final settlement without a counterparty on the other side, it is credit. And so what we are seeing is the value of credit changing relative to final settlement. Now, no surprises which way it is changing. It is changing downwards, just the same as every fiat currency in the past has. And every fiat currency in the past has finally disappeared. Now, this is actually what we're now facing. And the reason we're here is because of insurmountable, unproductive debt, mainly in the hands of governments, which require continued growth, if you like. But what is growth? Growth is growth in credit. So the whole thing is actually founded on a basis which is bound to collapse. And that is actually what we're seeing. And so, the idea, going back to what you were saying about overbought, oversold and moving averages and all the rest of it, the idea that you can successfully chart this actually is quite limited. I mean, there are some people who are very, very good at this, and I wouldn't decry their work. But really, this story is about the dollar going to zero unless someone steps in and stops it. And who's that going to be? Who's going to go against the wokeness? Who's going to go against the public demand, the electorate demand to really, they're less interested in protecting the dollar because, they don't understand what's actually happening. They think prices are rising rather than the dollar going down. So any cuts in welfare, in Medicare, in government spending just cannot be tolerated. You don't buy votes that way. You buy votes by spending more. And that's what the politicians do. And they will collapse it just the same as Helfferich, who was the economy minister in early 1920s Germany, did with the Reichsmark. And the amazing thing about it was that his understanding of economics, he was one of the top economists at the time, and he presided over the collapse of the Reichsmark. And furthermore, he was the architect of what replaced it. Can you believe it? But today, this group of politicians have not even a fraction of the understanding of economics that Helfrich had. And yet he presided over the collapse of the currency. So what hope have we got? The answer basically is that gold and silver go to infinity. Or as good as, unless someone wakes up and gets the mandate, and this is the important thing, gets the mandate to deal with it. But nobody's going to get the mandate. It's always a question of crisis first, solution second.
Silver's bull run is expected to continue into 2026, driven by intense physical supply constraints, with Chinese inventories reaching multi-year lows, alongside surging demand for industrial applications like solar panels and electric vehicles. While some analysts suggest a potential for short-term corrections due to excessive volatility, the long-term outlook remains bullish. If gold and silver are reclaiming their role as final settlement money, are we witnessing the early stages of a new monetary order? Let us know what you think in the comments. If this video brought you any knowledge, give it a like, subscribe, and ring that bell so you're always in the loop. See you in the next video.